Welcome back to Profit Path. Today is a super quick, short, sweet, concise breakdown. Let's get right into it. The S&P 500 has notched its 26th new high of 2025. It's happening a lot, and it was led once again by strength in the Mag 7 megacap tech stocks. Look at the incredible performance year to date. You got Apple up about 18%, Nvidia up 215%, Microsoft up 35%, Alphabet up 30%, Amazon up 29%, Meta up 134%, and Tesla up 152%. These companies are crushing it. And you also saw today small caps notching fresh record highs as well. The broader market has held up pretty well, all things considered, with rising inflation and kind of mixed economic data here and there. But investors seem to be leaning into a risk-on trade. Let's check out the key movers today, and then I want to share one warning that you need to know about. Nvidia is back near key resistance, and this comes after the giant Intel investment. You probably heard about that. Nvidia is up about 240% year to date. Now, some traders are asking the question, is this a good time to maybe take profits because it's been such a wild ride? Others are saying, no, let's keep riding this momentum. What do you think? Should you take profits on Nvidia or hold? Let me know. We'll keep riding until the wheels fall off. That's usually the case. Apple is also breaking out past a buy point. Demand for the iPhone 17 is extremely strong. We just got confirmation of that. And other chip-related stocks are doing really well. You've got Micron Technology up 134% year to date. You've got Astera Labs up 163%. IonQ is up 219%. You got Oklo up 128%. A lot of these smaller chip-related stocks have had a vertical rise in share price over the last few months. Now excitement is high, but so is the risk of a pullback. So just something to watch there. Now the big news this week, of course, was the Fed cutting rates by 25 basis points. This was expected. Markets were pricing in a very high probability of this move. But now something interesting is happening with Treasury Yields. They're beginning to rise again. The 10-year Treasury yield is now above 5%. This is important because it could pose a headwind for growth stocks. Growth stocks have been on a tear this year. They've led the market higher, but they're very sensitive to changes in interest rates. When rates go up, these stocks tend to fall, and when rates come down, they tend to rally. We've seen a lot of that this year, so the rate cut was great, and it boosted investor sentiment, especially for rate-sensitive sectors, like banks, for example. But the rising yield curve and inflation concerns still pose risks. And if you're looking for more information on that, I would check out the piece in MarketWatch. There's a link in the description. Now, another thing I want to mention before we go, there's an old Wall Street adage that September is the worst month for stocks, and there's some historical pattern coming up. From Rosh Hashana, which begins on September 22nd, to Yom Kippur, October 1st, markets tend to see some weakness during this period. This is because many investors, especially those in the US and Europe, they often reduce exposure ahead of this time. It's a Jewish holiday, so just something to be aware of. We could see some weakness in the market over the next few days. In terms of what to watch for tomorrow, Bank of America analysts said today that it might be time to start chasing the laggards. In other words, look at biotech, look at REITs, small caps, which may benefit if bond yields stabilize or dip. Those are the sectors that are usually the strongest when the Fed cuts rates, and this has been true in past cycles, so something to consider. To recap, we had fresh record highs across the board. Tech continues to lead the way, but it is possibly stretched. And if yields and inflation remain high, that could be a risk factor for growth stocks. My question for you is, do you think this record high run can continue, or are we due for a pullback? Let me know your thoughts. And if you found this helpful, don't forget to subscribe to Profit Path. I'll see you right back here tomorrow. Take care.